How is doing everyone? Welcome to our new webinar. It's Monday, May 26th. Let me know if everything is fine. I can see that GPU is here, team is around like always. Yuan Isaac is here after some time, I guess. Anas is here. So we have people joining in. Looks like that we are ready to go. Now, before I begin, just I will let you know that I will be away for a week or so, starting tomorrow. So there won't be a webinar next Monday, okay? So if you, the best thing is that you just subscribe to our YouTube channel and you will be notified whenever we are going to schedule the next webinar. If everything goes as planned, it should be maybe on Wednesday, Thursday, so it will be in midweek because I still won't be back on Monday. I will return on Tuesday, so maybe to prepare myself and for the markets, of course, I need a day or two, and then maybe in the mid of the week we will have this webinar. Okay, Tarek is also here. Hey Tarek. So what's going on? As you know, the US dollar is finally coming to the downside. We have been tracking this, and more importantly, last week we've been looking at US treasuries, and we said that whenever US treasuries will see a rebound or just stabilize, at the same time, obviously we would expect and looking for lower US yields, which will keep dollar in downtrend. So I still think that there is much more upside potential when looking at the US treasuries, but I also have some alternate scenarios when it comes to the US yields that I will show you in a bit here. But the idea is very simple here. We are in very late stages, or maybe already completed this wave C on treasuries, meaning I'm expecting a recovery on this market, and of course this means that dollar index will sooner or later revisit this April lows. We are already breaking out of this bearish flag pattern, if you wish, and obviously I think that once we are around 98, there can be even room for 96 levels. And as I said, I also have some alternate scenario in back of my mind, because I realized that because of tariffs, everyone just thinks that US yields should come to the downside. But keep in mind that all of this mess that is around tariffs because of Trump, the main purpose is that at the end of the day, they are looking to make just better deals. So trade deals will definitely be confirmed at some point, okay, for some better economic conditions for one or other countries. And if we consider that maybe then economy could expand, it means that the US yields could actually rise much further. So I'm looking this as an alternate scenario, and thinking that the US yields maybe could stay, even if they will stay sideways for a few more months, I'm still, with this bullish wave count, I'm still expecting wave E setback. Keep in mind that that's alternate count, but I always want to have some alternate scenarios back of my mind, because I don't want to force some fuse if the price action itself it's totally different. So here, even with these bullish interpretations, we have this ABCDE potential triangle, okay, here in the making. But wave E is still missing. So even if that's a bullish count, as I said, for the next few months, we are still seeing room for more weakness here on the US yields. So in other words, treasuries could rise further, and this could confirm that dollar index should remain in downtrend. So I will definitely update you through the next few weeks on these wave counts as well. I will keep an eye on several different occasions, because I also realized that if dollar index would really come to the downside into the fifth wave, then at some point we will expect stabilization after this bear market. Okay, so if dollar will rally, maybe this will be at the same time when the US yields will also stabilize at the lower side of that triangle range. So that's something, maybe I'm looking, some will say too far into the future, but that's something I want to have prepared if markets maybe will really move in this direction. But for now, as I said, even on this alternate scenario, because I want to make that clear, right? Even on this alternate scenario, we are still missing this wave E, and this wave E means lower US yields. Lower US yields means, even if just short term, that the wave 5 here should remain in the game here. So the fib levels, targets for the fifth waves are down here between 95, 97, and if you look maybe on a daily chart, we also have where wave C equals to wave A at that area around 95. So definitely this should be a very important level. Keep in mind that this dollar, again, maybe will not just stay bearish for the whole time. At some point, everyone will try to look at the dollar like it's going too far, too low, especially because at the same time you will have other currencies that will just go too high. And of course, currencies in general, especially those major currencies, if you look at crosses, they won't just move in one direction forever. They will be more like a cyclical movements there. So even if we see this 95, I think that there can be a period of a new reversal here on the dollar, and that's something that we have to consider, especially when it comes to other markets and intermarket analysis. Now, but as said, in the short term, we obviously are expecting more weakness. This wave 5 is still ongoing. It should be structured by 5 subwaves. There is a holiday in the US and UK, so maybe there won't be any kind of a real progression to the downside just yet, especially because if it's Monday, you know how I look at Mondays, there can be a reverse. So, but even if you see some kind of a rally in the near term, I just think that this intraday previous swing highs can be basically very interesting resistance here around 99.60 to 100 level. Okay, so after some kind of a intraday rally, I would anticipate more downside on the dollar. Looking at the euro, we are basically breaking very nicely this trendline resistance. It could be even ongoing impulsive bullish structure as long as we are here trading above this bullish level that was broken last week around 112.66. It was also retested as a support. So as long as we are above that level, I just think that there is a chance that we will just continue straight to the upside. But as I said, because of its holiday, maybe we'll have to wait a little bit longer. Maybe tomorrow we'll get some more volatility and momentum that can push the prices higher. But if we see maybe a retracement, still it's totally fine. It could be a leading diagonal then as a first leg that belongs to this higher degree wave 5. So euro dollar, I just think it's bullish. Of course, those tariffs that were firstly announced last week by Trump, that he was recommending 50% on tariffs on the European Union starting on June 1st. This has been put on pause now. So you can see there is a lot of uncertainty, a lot of noise, which can cause some new, because there will be some more news on this story, of course, and this can possibly cause some back and forth moves here. But even if we see some retracement, I think that there will be more upside. It's also important to understand that that if there will be any kind of a tariffs that will that won't put the European Union in any kind of a good position, then maybe ECB will be looking to cut rates even more than just one time in the next, maybe in June. So that's also what we have to consider, especially once we will be trading in a fifth wave, because if there will be more cuts on the schedule for this year from the ECB, maybe that will trigger some potential limited upside here for a wave 5 later on. But obviously for now we are still not there. We're just looking to progress higher into this impulse. Now looking at cable, this one has made a very nice extension move to the upside. We have seen this movement unfolding since inflation data came out hotter than expected. So maybe Bank of England will have to make some step backs, and obviously it's not something, if you have higher inflation, you don't want to cut rates here, because this will send most likely inflation even higher. So that's why cable is doing quite well, and we are seeing prices in a fifth wave. If you are our member, then you know how are we counting these subdivisions here. But I think that just after retracement there is a bit of more upside, but once we are at 137, 138, just keep in mind that there can be some slowdown. And of course we will update all of these wave counts, not only this but also the smaller scale, for our members through the week. Looking at Aussie, Aussie here, maybe I just could start with this one. It's a daily chart, and you can see that we are basically trying to break here above this 200. I believe it's a 200 moving average. However, because we are just spiked to a new high here at the start of the week, you know that maybe that's not a real confirmation yet. But if at the end of the week we would remain here around this recent spike high here, which was around 65.38, then I would call this as a successful breakout, and then obviously I would be anticipating much higher prices. But when it comes to these moving averages, and if I have to analyze where it's the best place to look for potential support, it would be down here. Okay, so it really depends how the market will be trading through the course of the week. I'm tracking basically two different interpretations, but overall I just think that Aussie will resume higher, but just don't be surprised if we see any kind of a reversal. It won't be any kind of a bearish price action, most likely just move back into the consolidation. Okay, so in such case, watch the levels at the lower side of this consolidation pattern. And when you look at the Aussie here on the daily chart, you can clearly see what's my views there. I just think that with the recent strong rebound away from the 78.6%, we are basically trying to build this new recovery that at some point will retest this trend line, and then let's see what happens up there. Looking at dollar versus Swiss franc, this one is also coming very nicely to the downside. We are breaking this corrective channel, and that's probably the most clearest wave structure that you can get. Very strong clear downtrend followed by a free wave rally right into the 38.2% and the former wave 4, and now you also have this broken channel. So I think that after a pullback, which obviously shouldn't be surprised, it could retest the trend line. I would anticipate more weakness here. Also, as you know, Swiss National Bank, they're looking at exchange rates very closely, and if there will be any kind of new uncertainty, if there will be any kind of a risk of moves, and Swiss franc maybe at the same time we'll see strength as a safe haven. And if the Swiss franc will just go too far, especially versus euro, they could possibly be looking for some kind of intervention. But for this, watch what will happen on the euro Swiss franc. And when it comes to the wave principle, okay, to the wave structure here, I just think that we have a very clear multi-year and a closer look subdivisions here. You can see the very nice 5 waves down that could be now in very late stages, and you know exactly what has happened here previously, that Swiss National Bank always played the most important role when it comes to these massive reversals. And maybe there will be something else this time, but when it comes to wave principle, it's really telling me that we are in very late stages of this wave 5. But even wave 5 here should be maybe structured then by 5 subwaves. Possibly could be forming an ending diagonal. So maybe another retest of the lows, and this could go very nicely with this potential final drop here on dollar Swiss as well for a 5th wave. It really will be important to understand what will trigger this sell-off. As I said, if this euro Swiss franc will move to the downside because Swiss franc will see these inflows as a safe haven because stocks would be in downtrend, then we know that this will be a very important indication why maybe investors will try to keep the Swiss franc. And of course it won't be easy from Swiss National Bank to fight these moves, but still, if they will be aggressive, of course they will do everything to try to prevent Swiss franc from rising too much. Looking at dollar yen, I'm observing different ideas, and what's the most important everything here is that we are still in a downtrend in this within this higher degree wave 4. So I'm looking for a drop into this year 137. This could be a massive support. I'm just wondering if maybe this will come after some kind of a triangle. I don't really like this wave C, how small it was compared to the subwave A, but I have some alternate scenario as well, which still suggests that as long as we are below 148.50, we could continue lower. Because if you look at on the 4-hour time frame here, we have some very nice beautiful reaction lower. You have a broken trend line support. So if we see, that's something that we'll figure out in the next few days. If we'll see a pullback or a rally here, I just think that 145, 146 could be beautiful resistance. And while I'm looking at this level, if you zoom this, you can see, if I'm not wrong, that was some kind of a gap here back in mid-May that was still not fully filled. We basically moved, gapped lower. We have seen some rally, but then just continued to the downside. I think that the euro dollar also have some still one gap a bit lower. So if we see this kind of a retracement, definitely I just think that this could be a beautiful resistance if obviously we rally into this area. Now someone asked me about pound Aussie. Basically I will look at pound versus New Zealand dollar, and basically their New Zealand dollar, Australian dollar, these are commodity currencies, and those crosses will usually have a very similar direction, right? By the way, before I continue, please make sure to press a like, okay, so that we will be listed higher on YouTube. That will be very, very helpful, because as you know, I share a lot of charts, a lot of information on a weekly basis. So to support my work and that I will be able to provide you this free content, make sure to press a like and support us, okay? Now looking at cable versus New Zealand dollar, a few weeks back, we said that, and I also illustrated that crosses like these are moving in cycles, okay? They're not tradable like dollar versus Turkish lira or something, okay? In just one direction. They will have most likely something like this. And you can see that we basically touched the upper side of these cycles few times here in the last few years. And we basically have seen a move into these late stages of this cycle also 2 months back. At the same time, this of course is even more significant for me whenever I have this Elliott wave pattern showing us that we have ABC movement right into the late stages of this cycle. Plus you have potential wave C here unfolding as a wedge formation, and maybe we are already topping out. So I would say this, as long as we are trading below the upper trend line, okay, of this channel, I just think that we could see more weakness. So I would not be surprised maybe that we'll see start moving to the downside, but even if we just move sideways, I just would be prepared on bears rather than a bullish breakout, as long as we are trading below the recent swing high. And now if you have this in mind and also consider what is unfolding on a smaller time frame, keep in mind that whenever you are looking for potential top formation Elliott wave analysis, if you see let me illustrate like that, if you see some very sharp moves here, and then you see market suddenly reversing, what you have to see in this smaller scale, okay, is that this drop is very strong and clearly in 5 waves. That's the most important confirmation that you can get, because that's exactly where this kind of a price action will exactly tell you where we have a potential top. And this is very useful, especially when it comes to potential trading setups, okay? So I'm thinking that we have this kind of a price action on a smaller time frame. You can see that that was a very nice massive reversal that can be counted in 5 waves, okay? And what's the most important of everything is that even if someone would try to count this as a correction and would anticipate more upside, then this direction back to new highs should unfold or should show us impulsive characteristics. But if you look here at the most recent price actions, we have very nice wave A and then much slower wave C here, okay? Which even shows wave C potential wedge formation with an ending diagonal. And when you have sharp wave A and slower wave C, you will usually see a divergence on the RSI at the same time between wave A and wave C, and this tells you that bullish momentum is decreasing compared to the first leg. There are not that a lot buyers anymore. There were just much more interested in this market when we were in the trading in the first leg. So this kind of a price action just telling me that we could be in a very late stages of this corrective cycle. So we are already seeing this broken trend line. So I think that as long as we are below this recent swing high, there's basically a chance that we will continue to the downside. It doesn't mean that if anyone is looking for some kind of shorts here, that you have to look and catch all the way big moves to the downside. It's definitely a very big downside potential, but for this week, I would not be surprised if we see a retest of this lower swing low here, and then maybe even start tracking lower prices. Also, when I look at this kind of patterns, it's not a bad idea to look at wait a second, to look at the candlesticks, and I can look at it here. Okay, and if you look at candlesticks, and if you know what are the reversal patterns, then I'm sure you will recognize this kind of formation. It's on a daily chart, so it's a daily candlestick, and it's confirmation of a reversal when you have this very strong bull candle, then completely reversed by a red candle. Okay, so it means that bulls within this green candle were just temporary, and that bears are now in charge. Okay, because that was the latest price action. And you can see also that we are now trying to break, we're already breaking the previous two candles. So basically that's, from candlesticks perspective, that's confirmation that we have a top here and that we can continue lower. And if you also add this to Elliott wave analysis, also the wedge pattern formations, then I just think that there's a chance that pound will stay weaker compared to New Zealand dollar. Now looking at gold, gold has made a very nice, beautiful three wave retracement here. It was a very nice bounce away from the lower side of this corrective channel, looking that we are now ready to break this upper trend line. Maybe not just yet, as I said, because we have holidays, momentum is lower than usually, so maybe you just should be aware of some retracement in the near term. I just think that very nice support is at around 3280, but maybe, who knows, we will see a break. Let me illustrate this. Maybe we will see firstly a break out of this corrective channel, retest the previous swing wave, be a resistance, then a pullback, and then more upside. So you just either observe and wait on pullbacks, either one from here or one a bit later. But after retracements, I just think that there will be more upside on gold. And the reason why I think that gold will stay in uptrend is because if you look at the dollar Chinese yuan versus gold, this is longer term cycles, and you can see that whenever Chinese yuan has experienced a very strong and massive reversal, what happened? Gold moved to the upside. It resumed in this bull run. It happened in 2016, 2019, after 2022, and now again we are at this point. Of course, it makes you wonder how far can gold go after we have seen already where this massive move to the upside. Well, when it comes to metals, it's not only gold. I just think that silver is also very important, and it's been lagging quite a lot compared to gold. So I'm still a fan of silver here, because obviously we also had a very nice, beautiful three wave retracement. So that was an ABC pullback, very nice sharp rebound. So I still think that for this year, silver has room for 36, 37. And as I said and discussed already in the past updates, watch out gold silver ratio. This one is also telling us that silver can do well maybe in the second half of this year. Now, looking at the S&P 500 on stock market, as you know, we are definitely expecting new all-time highs on the S&P 500. Just wondering what may happen maybe this week, because at the end of last week we have seen some reversal. It happened, I think it was triggered after Trump has said that they will announce a 50% tariffs for the European Union. So that's when we have seen this reversal. And what is basically happening right now, we moved out of this upward channel, so maybe we will see some kind of a higher degree pullback, and this can belong to this potential triangle. That's one scenario that I have in back of my mind, because I also see these still unfilled gaps. Of course, it would be much easier to discover some kind of a bullish patterns when you have these gaps filled after ABC retracement. But of course, this correction is then far from over. So what is that's why I said earlier that it's important maybe, and will be interesting to see how the price action will unfold through this week, because if we'll see more weakness and even break below 5,700, then I would be even more confident that really we have a triangle. But till that happens, of course, we have to observe some alternate counts as well. And here, maybe that was a fourth wave retracement, not really filled this gap, but it came quite close, and now we are recovering. And I posted to our members 2 different wave counts, which suggests that in the short term, I'm talking about the smaller degree wave counts, that in the short term, after this recovery, we could see more upside. And then we will decide if that's part of a new impulse that will take us back above 6,100, or maybe it's just a temporary corrective recovery on the intraday basis. But it looks like that in the short term, as I said, maybe we have here more upside in the cards based on both interpretation. But if after this rally we'll see more weakness and then overlap, then unfortunately this S&P 500 will stay trapped in this range for a bit longer. But still, higher degree trend is very easy to recognize as long as we are trading above this trend line support. Looking at German DAX, this one shaked up a little bit at the end of last week because of this announcement from Trump, but then they had discussions with leaders from Europe, and of course they put this on pause. So there will be some new more news on this, I believe, coming out in the next few weeks, but I would not be surprised if everything will be done and more positive even before July. So I just think that even if you see some kind of a consolidations, I just think that still at the end agreements will be reached, and stocks, whenever this happens, will continue to the upside. But in the short term, if you see some retracement, notice that we have some gap here on German DAX. So I think that this gap from the opening price of this week could be very interesting, very nice support, and watch out for potential more upside later on into the wave 5. Okay. Now let's take a look. Let's switch to some of the single stocks. As you know, Trump last week caused some pessimism on Apple, because he said that they are going to impose 25% on tariffs on Apple tariffs on iPhones sold in the United States that are manufactured outside of the country. Okay, but so that's why we have seen some move to the downside. That's, of course, won't be easy for Apple to handle or make any kind of these big shifts. But what's important is that even if this would be the case, at the end of the day, of course, these potential new tariffs will be paid by consumers. But still, keep in mind that consumers, the customers from Apple, will still be buying new iPhones. So even if there will be some new tariffs, I'm quite 100% certain that people will still be buying their products. That's 100%. So if you consider this in the back of your mind, if you want to own some kind of a shares, you definitely want to also own some of the shares that people are using. Okay. So on the long run, of course, Apple is going to stay here no matter what happens with tariffs recommended by Trump. So I still think that maybe in the short term, we already could see some very interesting support. 190, in my opinion, is a very beautiful support. We also have 169, where I think it's maybe the most important near-term invalidation level. So as long as we are below that level, I just think that there is a chance that we'll see a recovery. That's one thing. The next thing is that we have this unfilled gap still at the highs. Okay, and we filled a few gaps here with this recent sell-off. So I'm thinking that there will be potential more upside. Of course, I will be wrong if this 169 support is broken, but when you look at the longer term, it doesn't mean it's some kind of a new very dramatic for Apple. Of course, we will again expect some kind of recovery and stabilization, even if this drop would be able to count down in 5 waves, okay, because we know that after 5 waves market will recover in 3 legs. Looking on MD as well, this one I think we covered it 1-2 weeks back. That was a very nice rebound. We already touched this level, so bearish impulse interpretation invalid. We also could be actually could be dealing with a new impulsive reversal from the lows, and if we'll be able to count 5 waves up sometime this week, if prices will reach and break above 121, then I think that this will be the most important bullish confirmation. Then after any kind of retracement, just be aware of more gains here. Also recently we've been tracking eBay as well, and this one is already trading at new highs. So firstly, I was looking for potential triangle and deeper wave here, but since market is already at new highs, I just think that this one is now already eyeing higher targets for a 5th wave. So it's not really I don't see any kind of a real or interesting developments or opportunity here on the near term. Looking at McDonald's, I think that this one still has a very nice ongoing pattern. As I said last time, we basically are tracking 2 different interpretations, but the most important, or it makes sense to look at this as a triangle, because basically you're just trapped here in this range. So after some pullback towards the lower side of this range, or around 300, that's a very nice psychological support. I just think that there could be more upside. But as an alternate scenario, you can also count 5 waves up here as well from that level. Okay, so that was 5 waves up and then a counter-trend 3-wave movement. So that's also, with different labeling, you also have another bullish interpretation. So I really think that McDonald's has room for more upside, and that maybe in June we could already be trading close to these levels here. Now looking also at nvidia, which should be very important. As you know, this week I believe we have earnings on earnings on Wednesday after the close. Okay, so today we have holiday in the US. They have then tomorrow markets will open, so maybe if we'll stay sideways tomorrow on stocks, then even, as you know, because that's a pretty big deal, nvidia earnings for the whole stock markets, then maybe even on Wednesday we could see some bit of more slow price action, and then Thursday, Friday could be much more volatile after this data is behind. But when looking at the wave structure here, looks like that we are in 3rd leg of recovery. What's interesting, that even if this would be kind of some kind of a wave C that will be targeting 146, 150 area, still you have wave 4 that belongs to this wave C, but ideally we are obviously looking for a wave 3 to the upside. So I think that as long as we are holding here above 111, that's still an uptrend. A drop, an overlap with this level will make correction or whole pullback from that previous highs just more complex. Okay, but for now I just think that direction is pretty clear and suggests that maybe this will have a positive impact on cryptos as well, especially if you look at semiconductors here. Notice that semiconductors have made 3 waves of retracement back towards the lower side of this corrective channel. Okay, and I just think that this gap could be very interesting support. So maybe in the middle of the week we see more weakness, and then I would be looking for a recovery. So what this can mean for Bitcoin, new price scale. So obviously, if semiconductors will stay in uptrend, we can expect that cryptos will also do well. And as you know, Bitcoin has already reached new all-time highs. Okay, but keep in mind that we are here in a fifth wave. So just even if we have targets around these fifth targets around 150, okay, that's the ideal targets. But if someone is holding this Bitcoin for the last 2 or 3 years and looking for exit, just keep in mind that what may happen or how will you react and what this means for your portfolio if maybe this fifth wave target isn't really reached. It doesn't mean that your analysis is wrong. You still are predicting that this is a fifth wave, meaning that you are in the late stages of this wave 5. So if someone wants to go out and make profits, then maybe just consider how will you maybe adjust your portfolio if you really will see maybe this fifth wave finishing earlier than we think. Okay, because that's certainly possible. Because if we really just will start turning to the downside and breaking out of this channel, then it means that we could again step into this higher degree consolidation that could last for 2 years or so. So you really have to be very careful and keep an eye on a closer price action that will try to predict what may happen in the months ahead. Because keep in mind that at the end of the day, the important is your money. Analysis is always second. Okay, analysis is first when you enter the trade, but then once you are in the trade, you want to protect your profits, or you want to make something from those moves that already unfolded. Okay, so you don't want just to wait that everything will unfold in textbook, because it won't. Okay, markets will usually surprise when least expected. So just keep in mind that but of course that's more for traders that are maybe holding now for a few months, maybe a few years, but want to go out. But if you're looking for some longer term investments here and not planning to sell, then maybe that's not even important, because obviously you are holding for a much longer period, and then of course the next year cycle or 2-year cycle of a correction will just be a new accumulation for you. Now looking at the Ethereum, which by the way should be quite interesting, because now when we have Bitcoin trading at new all-time highs, keep in mind that maybe there will be some more investors that will look on some other potential setups on altcoins, because they could maybe be much more attractive. And I would not be surprised if that would really be the case, because when looking at the Ethereum, I just still think that we have a very beautiful price action here. Last week we talked about support around 2,300. We have seen a pretty nice rebound, and now we are just consolidating. So I think that we are here in a wave 4, and possibly wave 5 is yet to come. Also, if you look at futures, keep in mind that we still have some unfilled gap here around 3,300. So I would say that 3,000, it's maybe like a magnet, because it's also psychological level that could be maybe reached out of this fourth wave consolidation. But then if at the same time we fill this gap, that would be the perfect time when we see some retracement. So maybe in the near term, Ethereum could outperform Bitcoin. Also, keep in mind that we have if you look at the total market cap that excludes Bitcoin, you can see that this one is also forming a triangle here. So maybe there is some switch in dominance, meaning that Ethereum could take over, at least in the near term. Also, if you look at Ripple, this one has made some very nice recovery. What's the most important is that there is no chance you count this as an impulse. It was counter-trend movement as a correction, and now we are recovering already out of this channel. So I think that after this retracement, there could be more upside. Very nice support round figure is around $2 for this potential retracement that could be a bit deeper in the near term. And why I'm looking at this massive support? Because you can see plenty of liquidation orders here around $2. So maybe that's the perfect area of the support from where we could bounce. It was very similar here back around 2.5. You can see that there were massive liquidations from those who were short, and then market, as you can see, reversed. So maybe these green boxes down here could be green lines. I mean, down here could be very interesting for potential rebound. Okay, traders, that was a lot of charts for today. I hope that you enjoyed the content. If you have or are interested in any of more analysis, make sure to visit us at wavetraders.com or just simply follow us on our social media, and make sure once again to press a like on this webinar and leave us a comment if you're watching this webinar a bit later. And hopefully I see you again next week. Once again, remember, next week there won't be a webinar on Monday, but most likely in the mid of the week once I'm back. Traders, good luck and talk to you soon. Bye.